Hello, ladies and gentlemen, and welcome to the show. This is a show, yes. All right, we have five people in the chat, and we have five people watching. So we're just going to begin. Any other person who came in later can follow up. It's just going to be a short predictive analysis video, and we are just trying to figure out what is going to happen here. So, at best, what we're doing is just guessing. I'd like to call it guesswork, but intelligent guesswork. So, it's not really gambling, but it's a more mature form of gambling that you can master and become a master of the craft. Anyway, so here this is Bitcoin on the daily time frame, and this is an inverted chart. I know it seemed kind of like what's going on here. So it's Bitcoin on the daily time frame in an inverted chart. On Mac, if you want to invert your chart, you can go to option and I. So when you do like that, it comes back like so. Yes, the inversion of the chart is just to give you perspective of how it actually looks, what you would do if price action was that way and to the upside. Of course, your bias can build up over time in such a way that you lose control, you lose focus of the bigger narrative or the bigger picture. So sometimes it's good to displace your chart so that you can see what you would have done if price were to be going up, having the same pattern. So as we see here, this would be an ascending channel, yes, and a lot of people will want to short this channel. You wouldn't be here thinking that price is going to go to the upside. You'd be thinking that it's going to come to the downside right here. Now guess what, that is an inverted chart, which means the downside we were talking about should be the upside right here. Now this is the daily time frame on BTC. Okay, so let's draw in closer to what we are actually looking at here. All right, so if you look at this chart right here, you will see that BTC has been bouncing down this support right down here for quite some time. And as it continues to do that, as it bounces right here on the downside, it goes back to the upside. So normally we should be expecting it to go up from here. Yes, we would not be expecting it to come down. I mean, you can see it happening over and over like so. So here, this might be our chance to, go up with it if it is to go to the upside. And what also gives us confluence to that is the stochastic RSI right here in the undervalued region. Now, when looking at your stochastic, you need to wait for this cross right here. The blue needs to cross the golden, this golden color right here. You need to see this cross here before you start to assume that it may go to the upside. Now, if we put a trend line right here, like a down sloping trend line like so, and we are linking these two tops like so, if we are linking the two tops, now note that on every time frame, price might look different. So what you would consider to be maybe a down sloping trend line on the daily time frame could just be some. All right. So we see that price comes up here, resists and dumps, comes up here, resists and dumps. So it's just natural that we should be expecting that it comes up here too. Okay, so if I take this like so, my trend-based fib right here, and this will be the general trend-based fib, it's like the larger one, and I put it like so. So I'm having it here, and this one is the trend-based fib that I've been using for quite some time right here. So I don't know, I've not taught this trend-based fib on the general channel. I was teaching this in the I think that's the premium section. Okay, so we do have the 0.618 right here, somewhere around 17.9 K, and we would expect that to be massive resistance right there. But I do think this could actually go up here, and here is why. So if you have any questions, just let me know down in the comments section. Where are the comments here? Nothing. Nothing. Also, if you want to use any exchanges, use the ones that I have left down um, in the description. All right, so this is the larger trend-based FIP, and it does project that 0.618 will be here. So the massive resistance is here, and you can see this rejection happening right there because of that 0.618. So that is a key zone to be watching out for. If we are to look at this other one right here, it should give us, and there it is giving us 17.5. But here is what I wanted to show you actually, and this can be seen only when you invert the chart. So we do have this, we are expecting that price should bounce anywhere from here, around here. So if it actually breaks through this resistance here, because resistance, it looks like support before because that was the inverted chart. So we do expect price to hit this resistance here. Now if we turn that to an inverted chart and we want to look at it from an ABCD pattern, we could come like so. So you take it like so and like so. Now note that it's just very close to that area right there. If we try to match the candle correctly, so we are putting it like this, and I'll explain what this means. This I don't think I've mentioned this before here. Okay, so we are looking at 18.4, around 18.4. Okay, so the law of ABCD patterns show that if you see a chart that looks like so, yes, you have a high right there and you have a lower high like so, huh? The law of ABCD pattern states that you have to take the measurement from this high right here to this low right here, and you take this measurement and put on the second high right here. This second high that has formed here will give you the target of price action when it's going back to the downside. So if you are shorting here, you are expecting that price should come down here. That's how ABCD patterns work. So you have one right here. Let me change that. Just this. Normal. All right, I'll do that later. Now this is just going to waste time. So you have this high right here. Yes, this is your first high. This is your lower high. This is the lower low. And if you are to catch where price is going to bounce off of, you want to be targeting the distance from this first high here to the low here, and you take this distance and put your measurement on the lower high here. Where your trend line points to here is where price is going to bounce. Most likely going to bounce. It's never any law. It may as well not go there. But you have a higher degree of certainty that price is going to come here. And that is the same type of fractal that we are looking at here. Yes? So we have the same pattern working like so. Yes? And we want to know where it is going to go if this was to be measured with the ABCD pattern law. So you are going to take the measurement from here. So we take the measurement from here. So that is our high. Yes, this right here is our high. This is our high here, and we put to the low here. Now notice that I am not using the weeks. I use the bodies, and this is on the daily time frame. I never use the weeks on the daily time frame. It may never work. I use the weeks on maybe 30-minute time frame sometimes, and 15-minute time frame. That's the best time frame to use weeks. 15 minutes and below. Yeah, because these are volatile time frames. But on the daily time frame, you would easily see price, work like going slow. So you want to use the bodies, and the bodies are much more conservative. They give you more accurate targets. The weeks will just confuse you and make you lose entries or lose your take profit. So according to this pattern here, if we take this like so and we put this here on this second high right here, this will be giving us $18,500. Okay, now let's take this like so. This is the inverted chart, and there we have it. So we are looking that price is going to go to the upside right here. Now that is eerily close to our resistance here, the point where we expect that price is going to bounce to the downside. Now note that the stochastic here is undervalued, which really means that it is going to go up, and even liquidity in the markets right now, everyone I think is just going to go like so. Yes, now it may as well go. It's just unfortunate that in these markets we usually just experience stuff like this. You always see something that does not align with your idea, but you just have to pick a side. There is no other way around it. So here it is to be a lot obvious that price is going to go to the downside. That is too obvious. So we want to think unlike other people. This is clearly a bear flag right here. It's clear this is a bear flag, but we are also seeing an ABCD pattern when we paint it like so. Yes, and it's just too obvious that it should dump. Now we can also see that price has been holding this support right here. We can see that price has been holding this support here with this candle like so. So we wouldn't just be assuming that it's just going to go to the downside. If you even take this like so and take like so, yeah, that will be your ascending wedge right there. We want to get the target of that ascending wedge. We take from there to there and we put like so. That is it, hitting our target there and reversing with a bullish engulfing pattern. So we don't want to be thinking that it's just going to plummet after meeting a target. We can also observe an inverted head and shoulders pattern right here, which you can see here. Now the inverted head and shoulders pattern, the neckline is the most important part of the pattern. So if price breaks through that neckline, it will go for the target of the inverted head and shoulders, and upon coming down, that neckline will also become strong support. Yes, that is the neckline that price has been coming down to here, and on the 4-hourly time frame you would actually see that bounce perfectly. Now that 4-hourly right there is overvalued, which is why I think it is going to go down before going to the upside. Yes. Now if price did break this support right here, that will confirm further downside below this neckline. Price is actually holding, and here is another thing that you can learn here. We have a low, a higher low, and higher low, higher low. So low, higher low, another higher low, another higher low. Higher lows produce an uptrend, and they show us that we are in an uptrend, and they are a clear indication of an ascending channel too. So they are bearish and at the same time bullish. You need you need maybe some more confluence to believe if price is going to continue going to the upside or it is going to plummet. Now, so far as price breaks one of these higher lows, it is confirming a downtrend. But so far it broke this one, and bounced here, which we can see clearly. Now that bounce right here is still above this higher low right here. So insofar as price is not breaking that one, it is still bullish. That's what you have to note. Also on this 4-hourly, you can also observe an inverted head and shoulders right here. This is also an inverted head and shoulders, and the target for that inverted head and shoulders will be 17.3. So this is why I think I was mentioning in my TikTok that 17.2 to 17.3 will be, I just posted the video too here on YouTube, that 17.1 to 3 will be strong zone of resistance. That's because that will be meeting with the target of this formation right here. Now it could meet the target and dump, or it could meet the target and just retrace for another leg up. Now let's look at Ethereum, and Ethereum also has the same pattern that we were talking about on BTC. If we come to Ethereum's daily right here, and Ethereum's daily actually has the ABCD pattern printed out nicely. You could see it like so. So we have this ascending wedge right here. Let's go back to the regular chart. We can see a huge descending channel right here. Yes. So we have the descending channel right here. We take the closes of the candles, not the wicks, of course. And we also want to take the same measurement this way right here. So that is our descending channel. Now note that if price is to close above this descending channel, it is going to move like so. It is going to go right up to $1,861. So are we going to do that? The stochastic is going to tell us when or if, because there is no certainty, of course, if price does goes up to here. If the daily is already in the overbought and the 3-day time frame is already in the overbought, we will need, or we will have to get into short positions immediately. It is also observable here, this one right here, so this fractal right here, you can also see the same thing happening here. So we have this high here corresponding with a high on the stochastic RSI here. The second high right here does not correspond with a second high on the stochastic. That gives us a bearish divergence, and it's simply telling us that if you have not sold, now is the time to do so. If not, well, wait and get plummeted. Yeah, wait and get plummeted. So yeah, so that is what we are looking at now. If we expect that Ethereum will come up here. Yes, that's what we will be expecting. We will expect a massive resistance here. Remember that patterns usually work on threes. It is better to observe patterns in 3 forms, so in 3 wave price projection. So you would expect that price touches your line at least 3 times to confirm it. That is what we have had here. We have a first touch here, we have a second one here, and we can't really count this because it's just like a huge wick coming to the downside. We want a good close there at the support. That is telling us that price is most likely going to retrace. But here we did have a little bit of a dump here. But if you take like so, if you measure like so, you'd also see the same thing that we are seeing on Mr. BTC. That is the hold right there. So we have a first hold here where it went to the upside right here. So we see it there. We see the second one here. Now we want to know if we have another confluence. Is there any other thing that tells us that price could go to the upside? If we invert the chart again, we can use the ABCD pattern. Excuse me, I have a lot of things that go through my mind in a second. So we have the close right here. We could also take this one here, but let's take this one because it's much more closer to the second higher lower high. So we take the first one here to this low right here, yes, and then we take that to here. Now, isn't that perfect? It sits there perfectly. It sits perfectly at this descending trend line right here. So if we do have this here, now note that this does not mean it has to happen at this exact time. It may as well just come right down, so like so, bounce from here and go like so. It does not necessarily mean that that is the time. No, that has nothing to do with time. You need another type of analysis to measure time. Now, so that is too perfect to be ignored in my humble opinion. Now, remember that none of this is financial advice. What you choose to do with your money is yours and yours alone. Now, on the inverted chart here on Ethereum, we could also see that this right here has been an ascending channel all along, where we are having these types of movements like so. So it's simply just logical to think that price will come like so and want to bounce back like so. I mean, you wouldn't blame me if I thought that way. Now, if you let's erase this and see if we can have any other thing. And really, I've not done this one before. We are really just going to try and see if we have any other thing pointing to us that this is the zone to short or to get out of our trade. So we come back like so, and let's use the trend-based fib. Yes. So we're using the trend-based fib to measure price action to the upside. So we want a strong zone of confluence here, a strong zone of Fibonacci confluence. So if we are taking this from the bottom to the top, from the top to the bottom right here, we have the 1.272 Fibonacci retracement level, say kind of close to our zone right here. Now the 1.27 fib is the 100% retracement Fibonacci golden ratio. This 100% Fibonacci golden ratio is where you want to look for a bounce. If you do not catch a bounce here, you know that your maximum zone is the 1.618 Fibonacci. If this does not give you a bounce, price is going to go way higher. Okay, so this is where you want to catch your bounce. For maybe for the downside in this type of movement, you would want price to not go below the 0.236 fib right here. Actually, you would want your 0.382 to hold. If it does not, the 0.5, well, we want price to go to the upside. So right here we only have the 0.82 and the 0.236 level to hold. So if you are longing or shorting, your stop loss should be below the 0.236 fib ratio. If it does not hold, you are at free fall, and that could get really ugly. All right, so if we come now to the daily time frame right here, and we want to know where exactly you want to make an entry for a trade, you know, or maybe let's just see if we have another confluence first before we come to where exactly you want to make a trade. Let's see. So we have a first confluence here with the 1.272 fib golden ratio here. So we want to find another level of confluence. If we want to use the trend-based Fibonacci, let's see if we can have anything with the trend-based here. So we are actually taking from the bottom here to the top, and we are looking for this retracement right here. Actually, so we are coming now for this retracement right here, and that is giving us the 0.786 fib ratio. So between the 0.786 fib ratio, this is the 0.786 right here, which is at about 1.3, so 1,371 The 1.272 is at about 1,000 395k. So anywhere between that zone is where you want to exit the trade. um yeah, and yeah, I would be exiting any trade around here. Yes, that's where I would want to exit. Now, in my call before, my spot trade call in the Discord or Telegram group, you would find that my zone of exit is a bit closer, or say shorter, than all of this. It is somewhere around here. That's because I am, let me cancel all of this because I know it might get too cloudy here. So let's use this right here, and if we put like so, now that will be for the downside price action. So if we want to know where it will finally go, yes, we would take from up to down to up. If we want to know where it will go to the upside, we take from down to up to down. So it's 1, 2, 3. It's like the cross or something. Who is still here? Oh, I do have 22 people watching. Most of my streams don't do well. I don't know why. A lot of people don't come to watch streams. If we are to calculate where this bear flag will lead later, we will actually take this from here to here, and we take from there to here. That will be giving us 805. Yes, that's because I am seeing this like so. I see that we broke out of this fractal here. So when I'm making my confluence, I want a very, very strong Fibonacci to be exactly here. Let's see if we have that. So we go from top to bottom to here. We don't have anything there. So here is basically at free fall. So actually the bounce could come even to here. When you have price action in between Fibonacci's like so, you could want to close your trade anywhere around here, but this is telling you that price can extend until here, and the lowest zone from this particular fractal here will be giving you around 552. Yeah, actually 541 if you are reading it exactly from the fib. All right, so that's that for this one. Now, if you want to know exactly when to or where to enter a trade, right here, you want to come from your Fibonacci here. You want to take an entry on a Fibonacci golden ratio. Normally, you would find price when it comes closer to the Fibonacci golden pocket right here, which is between the 0.65 to the 0.618. You would find that price will retrace from there. Now, normally price has the tendency to retrace 50% of a candle before going to the upside. So even this here, I would see as a fake move. All right, I would want price to retrace off of the 0.5 golden ratio. It may not come there. It may just bounce at the 0.618 to the 0.65 here, which will be our golden pocket, but I will not be so sure of that, except it was a very strong uptrend. That is where I would put my entry slightly above the golden pocket, because I know that price could easily bounce here. My stop loss will be below the 0.238. Now, this is also depending on the time frame. If I was here on, say, the now I am on the daily time frame, so my point of exit would actually just be below a given Fibonacci golden ratio, because coming right down here exposes your trade, or say your exit, in a huge amount of loss. Now, all of this, you need this also even if you were not trading futures. A lot of people do the mistake in the bull market to assume that they can just buy and hold. And I say this out of experience. Even I have done it. Even I still do it. It's something that we all have to find a way to correct. We always have to use stop losses, even with spot trades. We have to have stop losses. That is how some of us, I say some of us because even I did the same mistake. That's how I got stuck with Chainlink and Gala and many other coins. Yeah, I sold some, but I held some, just hoping. And that is the mistake that we all do. We hope. We have to eliminate hope and focus on facts. And by facts, we're talking about facts on the charts, not what we believe or what we think. Yeah, so we have to improvise stop losses. We need to have zones that the entire investment or the entire trade is it becomes invalidated. All right, so that is that for the analysis, for BTC analysis. We are actually hoping that it's going to go to the upside, and when it does go to that upside and does not break the resistance, because with Ethereum here, if it does break that resistance, then we are really looking at some huge price action. But I don't think it will do that, and I will just show you in a moment. If it is to break that resistance there, if it does go right up, so we are looking at something like so. So we take this bounce from here and we measure up to here approximately 1,400, and we are putting here at 1,400, so it's somewhere around here, 400. All right, so that will actually be giving us $1,643, which will be a 22% price increase. Now, this is not out of the realms of possibility. Everything can happen. All right, so we are not removing anything from the charts or anything from happening here. But for now, our motive is that price should actually go up than plummet. It might as well plummet, but that's the risk I am willing to take. Now, why I think it may not do this right here is because of the dollar. Now, if you see the dollar chart right here, you will see that the dollar has some support right down here. Now, I charted this long time ago. Now, the dollar is a very huge market, so we have to actually look at it from the weekly time frame. The daily time frame will just be too short to understand. If we are to take this from here to like so, let's see. So we'll be looking at a 3% move on the dollar, which will bring it back to the neckline of this huge double bottom right here. Now, if the dollar does come here, we have a very strong chance of it doing this. Yes, very strong chance of it doing this. For it to come down here and just plummet, then that would really be Christmas. Christmas to those who will be in long positions, of course. But I don't think it's just going to plummet right down here, because this is on the weekly time frame. No. So that's on the weekly time frame, and we're looking at a period of 1,953 days worth of support. It won't just break that on in a single day. It would have to bounce here. It must bounce here, if at all it is to come right down here. If we are to look also, that double bottom is actually part of a bull flag. The double bottom is part of a bull flag, and the bull flag, you are going to excuse me here, is part of a cup and handle pattern. So you have this. Yes, you have this type of structure. Like so. So that's the type of structure we're talking about, and this is extremely bullish. Now, if we look up here, so we'll be wondering, why did the dollar go up there? Why did you go up there, girl? If we take from here and we put here, the dollar was going for the target of the handle. That's why it went up there. Not because the Fed increased anything. That's why it went up there. Well, it's really just because they increased something, but you could have, seen that months ago from this pattern right here. So if we are to look at this, well, the bull flag's target will simply be the same target for the cup and handle, which will be taken from right down from here. And ladies and gentlemen, we're looking at serious horror. We think FTX did something. We may as well still have the real behemoth coming for us all. Yeah, so we will have it bounce right here and go back up. Next year may be horrible, actually, if it is to go for the target of this cup right here. But on the monthly, is there anything there that is promising, giving us the promise of, oh, the monthly is actually overvalued right here, so it is going to plummet from the monthly. Is there anything on the 6 month? Anything? All right, the 6 month is also overvalued right here, so it is going to plummet still. Let's see, anything, no, that's the 3 month. 6 month, come on. 6 month is still on its way there, so, but not bad. Let's see, 12 month. 12 month is still getting here. So now, just so you know, if the dollar is here, that's our bottom for the bull, for Mr. Bitcoin. If the dollar is here, that's our top for BTC. When the dollar, and it is still just coming here, so when it comes here and marks this zone right here and starts to plummet, Mr. BTC will go up. Now we are on the yearly time frame right here. And yes, it is actually, and even if it comes up here, it will still form oh wow, it will be bearish still, even if it comes up here, because that will simply just be this. It will need to break a zone somewhere here. Now really, this is the yearly time frame, so bear with me here. So we're going to have something that is happening like so, if it does bounce from here, and this is a bullish engulfing pattern on the yearly time frame right here. Bullish engulfing pattern on the yearly, and we are having this right here. So this most possibly will result, and this year ends, oh, we're in December, so this will have to end. Also, when you see a bullish engulfing pattern, the next pattern after it is most likely to be an inverted hammer candlestick. All right, but an inverted hammer is also extremely bullish, because it means that sellers did not succeed to push price back to the selling zone. So it means that the bulls are still strong, and then you would easily have a full-on bullish candle. After that bullish candle is you would mostly have, let's say, a morning star somewhere up here, or a shooting star. That happens regularly. So you would see it's the same thing that we are seeing here. Yes, that's the same thing that we are seeing here. Here's the blow off top right here, and it starts to plummet. So yeah, so that is that for that's that for the long-term forecast. Now I was looking at something here earlier, and it shows that Ethereum, I think I spoke about this earlier on TikTok, that Ethereum bulls wake up after 4 years to transfer 298,000 worth of 22,982,000 Ethereum. So yeah, why would they be doing that? They wake up after 4 years, and we are hearing that those who have been staking ETH for a very long time will be able to unstake the ETH in March next year. So we would anticipate that the market will crash, because these people are taking ETH to sell. There's a very high likelihood of a recession happening next year, and so you would not expect that people hold crypto. A lot of people are going to hold fiat. It is always important to do these super long-term analysis. This gives you the bigger picture. Whilst everyone right here, whilst people will be crying that, oh, it's going to zero, it's going to zero, we will know that no, this is here. The dollar is overvalued on the yearly time frame, which means the next year will be bullish for crypto. All right, so you need to have these longer term forecasts. This gives you the confidence to invest. If not, well, you will not invest and you will sit and hope, and in the bull market is the time that you will start to rush. If the dollar does collapse, anything that trades against the dollar will go up. It's very simple. Everything that trades against the dollar will go up, and BTC and crypto generally has proven to be the most outperforming asset of all. So we would be expecting a very strong bull market if this does come up here. So this is still trying to come up here, so we still expect that next year will not be so good, but before the end of next year we should be seeing this stochastic here at maybe 90 up here. So by 2024 we should be expecting that price does the dollar's strength does start coming to the downside right here, and that will be our bull run. Now, thanks so much for being here and hearing me rant about crypto. We will see each other in the next YouTube live.